Sign up today.
The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
August 17th, the magical Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. And the easiest way to do that, well, is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the good in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We're going to go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. But much, much more important than that, during this next 60 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on in, 877-927-6648. If you can't dial in, we've got you covered there, too. You can always send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question. And in our Tiger's Den, well, any ping will do. So let's go ahead and get this show started on magical, magnificent, marvelous Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got all the indices trading in the green to the upside, with the exception of the Dow, which is back 57 points or 0.2%. The S&P's up 12 points, nearly 0.4%. NASDAQ a little over 1% or 117 points. Russell's up 6 points, 0.4%. Semi's up 1 0.6%. That's 35 points. The upside lead, the charge to the upside is Tesla up 132, Nvidia 32, Mercado Libre 27, Amazon 26. Zoom 21, a Goldilocks up 44 buckaroonies. That's over 2%. And silver, it's up $1.40. That's 5.5%. Lead the charge to the downside. Stamps.com off $10. Unity Biotechnology off 7. InvestNet is down 7.5 or $6. Transdigim Group is off $6, a little over 1%. So certainly there are things to look at. We're going to go look at, what are we going to go look at first? I'll tell you what we're going to do. We only have a couple of requests that are in. One is about the GDX and gold, so we'll cover that right out of the gate. And the other is about just a stock. Let's take care of this. This is for George, I believe, DG, Dennis. This is APPS is the ticker symbol, APPS, Digital Tribune Inc. And the question is, how does this look? How does this look? Well, in a period of 3 months, 4 months, this has gone from $5 to $25. It's a 500%. Oh, is that 500% or 5,000%? Doesn't matter. It's had one. You talk about zoom to the upside. So it's had quite a move. Everything is above profiles out here. And your question is, what does this thing look like for a while? I don't know. Here's what I can share with you. The only topping signal, Dennis, and I looked at this before we came on the air and I saw your message out here. The only thing to be concerned about is last week was the TD9 count pattern, where the bar following the bar number 9 made the high. And so here's the deal. This is really kind of easy peasy. If this week you see a close above last week's high was 26.29. The TD9 count pattern will have failed to have identified a top, much like it did the last time back here on June the 12th. And as soon as price closed over that high, it was momentum to the upside. So there's no signal on a monthly. There's no signal on the daily time frame. Nothing here for us to pay attention to from a typical topping pattern. And I think you get your message from this week, or any week. if you see price close over last week's high. That's going to be the key out there. So that's your ticker symbol, APPS. As far as support on something like this, well, support is you got several levels: 24.42, 22.86, 22.18, 19.94, and then finally $12.15. So everything looks okay right now. You've just got to be everything looks okay. But the proof of that will be closing above last week's high. So, Dennis, thanks for writing in. I hope that helps you out. Ian Miller, just kidding about the Miller part of it, wanted to take a look at the GDX. And the question was, Ian would like to go short the GDX. And the question is, where should he go short? And Ian wanted to sell into a rally. So here's what we've got. We've got new information that was presented to us this morning, Ian. Specifically, we're taking a look at the GDX. That new information was a brand new bullish structured daily profile. The more bullish thing is the mere fact that price today, this is the first day of the profile that is formed up here, price gapped up over the top of that profile. In other words, a profile has formed below where physical price is at. The top of that profile is 41.64. And so that's bullish. Now, with price being above that and that being bullish, then what that's suggesting to you from a profile standpoint, Ian, is that price may be targeting 45.78, the top of its bearish structured weekly profile. So you're asking the question, you want to sell into a rally based on the current market signals here, the daily profile, and combined with the weekly profile. This is saying your theory of selling into the rally would take place at about $45.78. That's what we see when we take a look at the GDX and its profiles. What we're going to do is we're going to populate my other set of charts, which I thought I had done, but clearly I had not. And we're going to pull those over here to look for any other types of signals, resistance signals for Ian. And if we take a look at Ian Miller, you know where that comes from. That comes from my big fat Greek wedding out here. And so there is a confirmed Rhodes momentum indicator pattern to the downside. Price never broke through key level of support of 38.34. And so what Ian's looking at is this could just be a counter trend rally. And everything that I said is true. And we're going to add one little caveat to that. And that is that the bounce so far inside the GDX has run right into Stevie's green line. Now, the green line is actually priced at, where do I get that data box? Show data box. There we go. Question is, where did it put it? Okay. So let me pull it over here. It'll make it a little bit easier if it's actually on the screen. And so Stevie's green line is actually priced at, there we go. It is actually priced at, okay, that's not working. See if I can do it this way. We'll grab it then. 42.81. Maybe grabbed it all along. I just wasn't looking in the right spot. 42.81. So Ian, I can technically, from a GDX standpoint, share with you that unless price closes over 42.81 and the high today has been 42.85, this could be just a counter trend rally with an A to B equals CD to the downside. Would I be willing to play it like that, knowing that price is above the top of a brand new bullish structure daily profile out here? Probably not. It's going to need more investigation, right? So we'd have to see the same kind of pattern inside of the gold contract. So when we get back from this break, we'll go check that out. Just looking to see if there's any signals on the weekly or the monthly, and the answer is I don't have any kind of topping signal there. So we'll be right back to take a look at Goldilocks when we get back from this break.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, Taz understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the Taz Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the Taz Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So when we're ending that last segment, we're taking a look at the daily time frame chart for the GDX. We're looking for always levels of support, resistance, or any kind of patterns that are present out here. So with regard to the GDX, what we confirmed here was that the nice move higher, the gap higher this morning, even though it's got a brand new daily profile out here, that price run right into Stevie's green line. That is resistance. So the question is, has the daily contract for gold run into any resistance out here? Now, I've got my synthetic version of the contract. This way, it allows us to take a look at longer-term profiles like quarterly, monthly, and so forth, even the weeklies out here. But what we can notice here is that there's a brand new set of profiles that is formed for the gold contract, and this is also above price. So whereas we had a new set of profiles formed below price for the GDX, which is bullish, here we've got a new set of profiles for gold that is formed above price, which is bearish. So we got two opposite message here. And so, Ian, what that means is this is going to be difficult to figure out how to trade this. So what that says to me is you and I need some real clear, definitive evidence to support taking that short trade inside of the GDX. Well, if you look for resistance inside of the daily contract for gold, that's going to be at the price point of 1992.80, and the high today has been 1990.20. So you're going to want to watch that 1992.80. Now, Steve-O had said, hey, you've got to look for some you're going to have some compelling evidence that I'm multitasking here, so I'm not doing too good at chewing gum and talking. Although chewing gum and talking, that would be pretty much gross, wouldn't it? Especially if you were watching me do that. So apparently I can't chew gum and think, but I'm not even chewing gum. Apparently, I just can't think. Okay, so now let's get back to the charts out here, since that critical pause has already worked. So with regard to gold, we can see that, okay, so we've got a daily resistance level for the gold contract, as well as inside the GDX. So we would have to use the short-term time frame charts for gold. We need some key levels of support to be broken. So if this is resistance, which you and I don't know just yet, we know it's traded up to resistance levels out here. The question is, where are those short-term time frame levels of support that price would need to break through in order to confirm some type of change in trend? Well, if we start with a 30-minute time frame, we're going to see that the gold contract has paused, which it should have, because it created or formed a TD9 count pattern, with the bar following bar number 9 being the high of the pattern so far. What this also did was on that last half-hour bar out here, it confirmed a Rhodes momentum indicator top. So the 30-minute time frame for gold has got two topping patterns out here. What we don't have, though, Ian, or anyone else that's listening, is we don't have any breaks of support. Now, price here on this 1 o'clock bar, it's the 30-minute time frame that we're looking at. But you can see that price exceeded both the low and high of the prior bar out there. That's a key reversal session. And because price did close one tick in the opposite, so you've got two different topping signals out here. Now, first level of support that price would have to close below would be 1991. That level is going to change. That's Stevie's green line as price moves up or down. But that's at least the first area. I don't have the profiles turned on this. Well, let's turn them on. Give me a moment here to pull those up on the screen, because we want to see where price is trading in relationship to those on the 30-minute time frame. TAS boxes. There we go. Put this on. Oh, well, shoot. Price, maybe it was turned on. I just didn't see it. It's well below price. We're talking about 1966. So, Ian, at this stage of the game, price would have to close below 1960 in the gold contract to even signal that there is a potential change in trend. On the 15-minute time frame, just for the heck of it, let's go down to a short term out here. I've got wave number 7. That's letter G for a top. That's it. Price is trading in between the profiles. You need to see it close below 1990.40 to suggest a further pullback. But the change in trend signal wouldn't come until you see it close below 1962.40. So at this stage of the game here, Ian, just sit on your hands. If you do see price, the gold contract as an example, begin trading above 1992.80, it gets inside that profile. Then that's telling us that resistance level of the bottom of that profile didn't take into effect. And if that's not going to take into effect or take effect out there, likely the GDX will be able to power up through Stevie's green line, that oscillator unchanged line. So that was a long way to get there. If we take a look at, for those of you that want to factor in the U.S. dollar index out here into that equation, let's take a look at the U.S. dollar index. And as we look at it, this has a nice confirmed TD9 count, Rhodes momentum indicator bottom. Price is below the bottom of its daily profile, which is 93.03, but price is still above Stevie's red line, which is 92.71. So you've got a bottom pattern out here. Price is trading between support and resistance. Resistance, by the way, 94.37. And support is going to be the low of that TD9 count. And that low specifically is 92.47. As long as the September contract remains above that, you've got, well, it's neutral right now, is its message. So don't get too caught up or hung up or say that the dollar is toast or anything along those lines, because that's a lie. There's a valid bottoming pattern, or two valid bottoming patterns, and price is not taking those levels out here with regard to gold. So ideally what you'd like to see out there, Ian, is you'd like to see some type of short-term bottoming signal inside of the U.S. dollar index. Now, I don't know if I've got that or not. We can put it in here. I've got a 30-minute time frame. I don't know if I've got it. Yeah, I do. So on the 30-minute time frame out here, you've got wave number 7. You've got a letter G on my screen out there. So that's a potential bottoming signal. The price is still, it's below Stevie's red line. It's below those profiles. So I wouldn't hold out that is the bottom signal. But that's how, Ian, I think you should consider taking a look at that short trade for the mining equities out there, and hope that helps you out. Sorry, folks, if that was a long way of getting there, but gave us the opportunity to go ahead and take a look at multiple things out there. Jay writes in, hey, Steve, how's that quad TAS looking? Any new profiles forming? Well, Jay, I don't remember the last time that you were with us. If it was Friday, there's nothing new since Friday, to my knowledge. Here are the quads that you're looking for. You got the ES Mini in the upper left. Price is above the top of that daily box. We know that means it's above resistance. It's bullish. Take a look at the NQ. Price above the top of its bear structured profile right now. It closed above 11,205. Well, that would be very bullish out there, profile speaking. The Dow is trading with inside its bear structured profile, resistance at 28,069. And the Russell 2000, that was the biggie on Friday last week. Folks, we took a look at that. As the markets were moving lower, it was Russell 2000 that gave the bottoming signal as price had moved down right to the tick of the bottom of its bullish structured daily profile at 1516.90. Price is above the center line right now, so price may be targeting 1605.70. So no new profiles, Jay. And we've got two that are bullish, ES and the NQ, and two that are just simply consolidating sideways out here. So hope that helps you out. With regard to the what? With regard to the what? Oh, Ian, one last thing, or anybody considering a gold short, or you really got to see it close below 1941 right now. That's the weekly oscillator unchanged line. You can see how it's got a nice TD9 count pattern. The price is tested and rejected Stevie's green line last week. That's where you really need to see it close below 1941.40 to tell you that things are getting ready to move and groove to the downside. This is Steve Rhodes with TFNN. We'll be right back. Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as,
whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's down 62, S&P's up 12, NASDAQ 100 up 115. And LB wants to take a look at NAK. Again, that's Northern Dynasty Minerals out there. And it looks like they have bottom. Could you please take a look at possible upside target, both short and long term? So, and what Lee is basically saying, hey, you got a nice little wide-ranging bar today. Has moved from a low of 149 to a high of 170 out there. So good percentage move. Price is still below the bottom of its daily profile out there, Lee. So that's going to become a target to the upside, 193. Price is above its weekly profile at $1.53 and above its monthly profile at $1.36. So all of that supports the move to $1.93 out there. Let's go take a look at my other charts, see what else we can find out here. NAK, let's take a look at the daily time frame, get this thing to populate. So, has it bottomed or not? We didn't have a bottoming signal per se. Forget about the per se. We didn't have a bottoming signal, period, out here. So I don't have a pattern. Doesn't mean that it didn't bottom. Price is trading above Stevie's green line. That's $1.64. You're at $1.68. So LB, ideally you'll see a close above $1.64 today. If you don't, then we don't know if it was just a bit of a counter trend rally with more to go to the downside. But taking that out, closing above it in 2 days, quite frankly, would be the number. 2 days above that 164 level would say 193 would become its target. You're wanting to know, though, even longer term, what this thing might be doing. So on the weekly time frame out here, what price did, as you and I have discussed before, just simply is running that key resistance level, the TD9 breakdown area at $2.30. But it prices above Stevie's green line on the weekly, $1.60. So that is good. That supports the move higher that we looked at on the daily time frame. And on the monthly, when it comes to NAC, again, 230 is the nut out there with regard to the key level of resistance. So that's the longer term target out there. And on the daily, you just like to see two close about above $1.64, Lee. And I hope that helps you out. Thanks so much for writing in. No other questions that I've got. So if you would like me to take a look at something, it's not too late to send an email to steve@tfnn.com. Inside that subject heading, please put radio show question, of course. You can always give us a call at 877-927-6648. And in the Tiger's Den, well, any ping will do. And if I have missed a few pings, my apology. Please retype them in there, and I will get to it ASAP. So what do we want to look at next? I think we just take kind of the general perusal of the markets out there. We already took a look at the TAS market profile, so we don't really need to go through that, and therefore we won't. If we look at the ES Mini here, this is the quad chart, so to speak, a different version, but the quad chart of the ES Mini for 4 different time frames: daily, weekly, monthly, and its quarterly time frame. 33.79, even Steven. And that means it's 1 out of 4 chances of being an even number out there, because it only trades in quarters. But it closed today above 33.79. We're at 33.80.75. That will negate its TD9 count pattern. And with price above, if price were to close above that, and price above the daily profile, shoot, that's suggesting higher price. But if we look over to the longer term profile levels, well, shoot, the weekly, which did have resistance where it should have, and the resistance is still there, 33.74.50, top of its bearish structured weekly profile. You did get a test and rejection of that level last week, but price right now is trading above that. Man, closing above 33.74.50 would be very bullish out there. Now, very bullish. Where would that take price to? That would be the question. The easy way to do that would be one way to do that would just simply be to take the Fibonacci expansion of its last set of major swing points. That would look like this. So that would say, on a weekly basis, if the ES can close above that 33.74 level, then you're looking at a run up to 37.04. That would be the 1.272 expansion of that last set of swing points. We take a look at the NQ out here. The NQ right now is trading above all resistance. The top of its daily profile, bearish in structure, is 11.205, 20. And so if price closes is above 11,205.20. Well, that is bullish. And bullish meaning what? Where would price likely target? Well, that would be the 1.618 expansion of the same set of swing points that you and I looked at, but just specifically here for the NQ versus the ES mini. That would give us 11,662 as the price objective. So the ES mini and the NQ are the ones trading above resistance levels out here, whereas the Dow is not. The Dow's resistance areas run anywhere between 28,069, 28,125, which is the center of its bear structured weekly profile, and 29,256 out there. And 29,256 is both the top of the weekly bear structured profile and monthly bear structured profile, 29,256. So it's really going to be a 28,125 number would be the go, no-go zone to get all the way up into that 29,000 area. Again, the Dow equity future contract and the Dow cash indice are two of the indices out there that do not have topping signals, topping patterns as we speak right now. If I look at the New York Stock Exchange and we take a look at its advanced decline oscillator, right now printing at 17.17 and change. And anything above zero says that buyers are the ones that are still in control. When that price oscillator is above zero, the next panel down, that would be panel number 3 from the top or 2 from the bottom. The line is green or red. When the price is above the zero threshold level, then that's the summation index, and that line will turn green. And when price is below the zero level, that's where sellers are deemed to be in control of the market. That line, or the summation index line, will go ahead and change red. Cool, huh? Cool. The spot volatility index. So right now, the message of the New York Stock Exchange is that the market is in the hands of buyers. You didn't need me to tell you that, but that's what the technical tool is telling us. Spot volatility index well below its 50-day exponential moving average. The 50-day is out at 2688. That's really the key number that you need to know. And price right now trading out at 2185. So well below that 50-day exponential moving average. The reason why that's so important is simply this. If I was going to teach somebody just the most basic, non-technical pattern at all, and they had the ability to at least get a chart and put the spot volatility index on it, and they could add a 50-day exponential moving average, that would be the one generic tool that you would teach anyone and everyone out here. That's represented by the yellow and green boxes, squares, rectangles, whatever shape it is that's out there, because they show you the periods of time where, generally speaking, either the spot VIX index is above or below the 50-day exponential moving average, and you get the ability to see what that actually does. You're not going to buy the top tick, because you don't want to buy the top tick. You're not going to buy the bottom tick or sell the top tick, but you're going to, generally speaking, I know I've said that term now twice, I believe, perhaps 3 times, so that would be the charm. But generally speaking, there's the charm for sure. There's Stevie charm, so to speak, out there. It's just a great guideline as to whether one should be long or short in their, let's say, their swing trade account. This is Steve Rhodes with TFNN. We'll be right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Let's go out to Gary. Gary in Michigan, I'm assuming. Gary, thanks for calling. Thanks for holding. How are you?
Hey, great. And how are you, Steve?
Very good. Thanks for asking. And what would you like to talk about, look at?
Well, yeah, I got a couple of stocks I've been following some different people, and then one that I didn't pay attention to, and I noticed that it's down today, but American Express, big name. But looking to maybe short it or, buy a put on it.
Okay. So right now, what American Express is doing on the daily time frame is trading right back into the bottom of its bullish structured daily profile. So if you were to see a close below 97.77, it's trading right now at 97.84. The low today, 97.82. If you saw it close below 97.77, then you'll see a close below what would be strong support, very strong support, or should be strong support, because it's a bullish structured profile. More buyers reside between 97.77 and 99.09. So if it's going to find support, this is where it is. If you see two closes below 97.77, then that would say, okay, that would support the idea that price is going to pull back further. And by pull back further, our price targets would be profile-wise 81.21 to 74.10. Those would be your price ranges out there. Let me pull over my other charts, see what we see out here with regard to American Express. On the daily time frame, we can see that that price is trading below its oscillator and change line. This would give us a price target to the downside of 85.92. So that's where your reward risk calculation should come in. I really think your downside target would be that 85.92. That's what I would be looking at on the daily time frame. On the weekly time frame, 93.06 would be a level of support. So that's good. We can stick. Well, 93.06 is also another level out there, but 85. So you'd have one level to be. So the daily gives you a price projection of 85.82, and you just have to be cautious if price is pulling back and find support at 93.05 out there. Ideally, if it closed below that on a weekly basis, that would be another positive for that pullback to the level that we're looking at on the daily time frame. On the Monthly for American Express, I don't have any real signal out here for you. So I'd say it's the daily. So does that help with regard to what to be watching for there with regard to? Okay.
And now I got something to keep in my sights, and then see where if it touches one of those numbers, then maybe I jump in.
Okay.
The other thing, too, you talked about the VIX just now, which I get that. That's the one thing you drilled it into my head. And I watch it daily. And obviously that 50-day moving average line, I'm not a charter, but I'm listening to you every day. So the bottom line is, but what's your interpretation of the VIX right now? I mean, is it telling you any signals? Because it's been trending downward. Is it, what any signals in your mind?
Sure.
That's showing up.
Yeah. So let's do this here. If we take a look at the spot volatility index, and I'll pull it over. The signal that we have is this did form a TD9 count bottom, and it did it. I'll give you the exact day. It was the bar following bar number 9. It was August the 11th out there. Also happened to be a bullish engulfing candle. Not that necessarily matters, but it tells us about the for the specific pattern. But it does tell us that, in essence, the theory would be that buyers are trying to support that level. Now, that level would be the low of that trading day, and that is 2154. So that, with that still being there, it tells us about, Gary, the potential, because it's a valid bottoming pattern inside the spot volatility index. So we know if the spot volatility index trades higher, we should see some type of retracement, not necessarily a major top, but if the VIX were to close above 28.29, right now it's trading at 21.81, so that's a fairly large move, that $7 move out there. That's a very large move, quite frankly. But if we did see that, that would tell me that there probably is that beginning move inside the S&P 500 back to key levels of support. So is there a signal to trade off of? No, not necessarily. Am I paying attention to this? Yes, that's why it was easy for me when you asked, hey, is there anything that you're looking at in the VIX? It would really be that trading session from August the 11th. But, Gary, the spot volatility index formed, in essence, a solid bottom on that day. Yet here we can see that the S&P, or the ES Mini, is trading above resistance, the top of its daily profile. So it's not lining up like it says, because of what we looked at in the spot volatility index, to load up to back up the trucks, load them up, and go short this market. We're getting conflicting signals. You know what I mean?
Yeah, it keeps getting more conflicting, because it's one day it's one thing that's conflicting with the other thing, and then that other thing switches, and then that switches. So it's like you tried to point out, and all the guys there have pointed out, that this getting to a top is tough, because it's always a moving target.
Yeah, I think the one thing that we do know, these key levels of support. So take, for example, here's the NQ, and this is really a great example of why these levels are so important. So here's the NQ, in essence, coming off of the March lows out here. And each time that we saw pullbacks into the bottom of the box. Now, for example, on April 21st of 2020, there was a close below a bullish structured profile. This is why, folks, I say you need to have two bars, because it can just be an anomaly. It can just be a one-hit wonder, because the very next day, price got back inside the bullish structured profile, inside the NQ, and it continued to march higher. We then saw the NQ pull back to test the bottom of a daily profile on May 4th. Bullish structure profile, that turned out to be support. We saw the same thing take place on June 12th and on June the 15th. Test of the bottom of a profile. We saw that. I see another one. We got one here on June 29th. We got another one, in essence, on July 24th, and then we had one just a few days ago back here on August 11th. So even though it's somewhat complicated, it's really not. Because if we see two closes below the bottom of a profile, especially inside the NQ, what that's going to signal to us, Gary, is there's been a change in trend. So when markets are making tops or bottoms, what we never know is this the one? Or is this just a top and price are going to pull back to test support, much like we've been taking a look at here inside the NQ? We never really know. But when we do get those change in trend signals, what that allows us to do, Gary, is maybe manipulate our intermediate or our long-term portfolios, maybe take some action there. but it's trying to sell the top tick and buy the bottom tick. Yeah, those are complicated. But getting the overall hamburger inside the bun here. Now, if we get two closes in the NQ below 10, 8, 14, that's telling us that it wants to head lower. And I would presume the rest of the markets would head lower as well. In the area to really be watching, I think today, if I was going to look for one thing to be focused on, that one thing would really be Apple. And the reason is, and I mentioned this during the 1 p.m. update, and that was because Apple has produced, so far today, it's produced a bearish engulfing candle, which confirms a Rhodes momentum indicator topping pattern. But price must close at least below Stevie's green line here, 455 and change. So I'm really watching Apple. Gary, we're going into a hard break. If you want to hold on to ask one more question, we come back from the break, do so, and we'll get right back to you. Steve Rhodes with TFNN. We'll be right back, folks.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back. Dow down 71, S&P's up 12. Let's go back out to Gary in Michigan. Gary, thanks for holding. Any questions, after what I last shared with you?
No, that was great. You always are. I do have another stock, but I know it's only a couple of minutes. If you want to have something you want to wrap up with, I'll call in another time on this.
Oh, go ahead. What's the stock? You're on the line.
The stock is Strategic Metals, SMDZF. Strategic metals. It's gold, but it has some interesting side benefits to it.
Okay. So right now, are you long this?
Position. I've been in it for quite a while, and I'm looking to maybe add more. I mean, I'm beating myself up not doing it for about 2 months now, but.
Got it. Okay. So SMDZF, that's Strategic Metals. Right now, it is consolidating with inside its daily profile. So you've got support at 52 cents, resistance at 59 cents. Price is above the top of the weekly and the monthly profile, so it's above resistance. So so those are bullish signals, and that would say you could consider adding at 52 cents. That would be the daily level of support. As we pull up my other charts out here, we do see a bit of caution. The caution sign took place on August 5th when it generated a confirmed Rhodes momentum indicator top with a bearish engulfing candle. So would I add right now? No. Would I add at 52 on a pullback? I'm not sure just yet. I'd almost feel more better about price being able to break above resistance, and that would be the high from August 5th. In lieu of that, on a daily basis, the actual breakout level is 19 cents. So we won't go there, but we do recognize that's where the most recent breakout level occurred. On a weekly time frame for this equity, we've got a TD9 count top. Boy, this is looking a lot like gold and everything else. It makes me kind of suspect about the move that we're seeing today and maybe tomorrow. Let's look at this again in more detail for you tomorrow. I would really be cautious at this stage of the game, okay?
That last comment was worth extra. So thanks for everything. You're always great. But I just had a bit of trepidation. So, okay,
no problem.
Tomorrow.
Thanks, Gary. Take care.
Well.
And take care, folks. We'll see you soon. Bye-bye now.